What's going on? Alex here, and today I'm answering your tax questions from Reddit. So this is a particularly interesting question given everything that's going on right now, and it's pertinent given that I'm getting this question from a lot of different clients. So let's take a look at it, and it is asked by Pensy Prep. Pensy Prep says, the $1,200 stimulus package filing for 2019, how does that work? Now, this person asks, if I'm eligible to receive $1,200 based on 2018 taxes, but ineligible based on 2019 taxes, should I just wait to file 2019 taxes, or will they make adjustments to account for this kind of situation? This is a great question right now, and a few of my clients reached out to me regarding this. So let's back up and let's figure out what we're even talking about. Now, the coronavirus situation has led to the need for stimulus, and the federal government has stepped forth and they've put together a pretty massive stimulus package. You may have heard about it. This is the $2 trillion package. It's a number that's even difficult to think about. And the idea is that they're going to provide help for large businesses, small businesses, and then your average everyday taxpayer. This is essentially putting cash into the hands of everyday people to try to stimulate the economy. And this is where this stimulus payment, this $1,200 payment came from. And when you look at this bill, I mean, it's 800 something pages, very difficult to go through. There's a lot of things still being interpreted and understood and digested. But in very general terms, the idea was we're going to employ a tactic known as, by people like Ray Dalio, as helicopter money, which means money's just going to rain down. And the idea is that if people have more cash in hand, they could spend more, and that can be a form of stimulus in and of itself. So the original idea was, when this bill was floating around in the Senate, was that everybody will get $1,200. And as bills snake their way through Congress, they tend to get a bit more complex. They tend to get some phase outs introduced, and they're limited in terms of how they can apply into which taxpayers. So in this situation, the stimulus package includes these $1,200 payments to individuals, and we'll look at a little bit later how that works. But that's the basic idea, and married couples can get $2,400 and so forth. So it varies depending on your situation. You get extra credit if you have kids and all that, but that's the basic idea, and that's what this person is asking about here on Reddit. And the interesting thing is if you read the bill, it's based on your 2020 income, all right? What's your 2020 income? Nobody knows, all right? And it says that, well, if we don't know 2020, we can base it on 2019 if you already filed your return. Now, it's an interesting situation because a lot of taxpayers still haven't filed their returns for 2019. So the bill says basically, if we don't know your 2019 information, we're going to base it on 2018, all right? And it brings up an interesting point, which I'll delve into a little bit later. I do want to present a little bit more insight on how the bill is structured and how the credit actually applies, and I think that'll make the next part more understandable, so bear with me here. Now, Forbes has a good article on this that we'll touch on in a second, but the Tax Foundation outlined how this stimulus payment really works in practice. And if we take a look at this chart here, I like pictures. I'm a pictures guy. So for me, it really helps to visualize this in a sort of chart format in terms of how this is going to play out. Now, if we take a look at, this is the proposed relief rebate in the CARES Act. Now it's been signed into law by President Trump. And if we look at this, now I have to double check to make sure that all these lines are exactly accurate, but just in very general terms, let's take this for face value for the moment, just to understand a very general idea of how this will work. Now, the rebate amount is this left axis here. The bottom axis is the income amount that you're going to report. It's based on AGI, or adjusted gross income. Now, it's supposed to be based on 2020. If they don't have your 2020, 2019, if they don't have 2019, 2018, okay? It's a general idea. Now, for a single filer with no children, you can get up to that $1,200 that we discussed, but it starts to phase out based on income. Very important. That's what these drop-offs here are all about. They're basically saying that if you make enough income for a particular filing status or particular situation, then your credit can go to zero, all right? So let's see how this looks. So for a single filer with no children, it starts to phase out at right around 75,000, and by the time it gets to 100,000, you get no credit. This is AGI, adjusted gross income. Similarly, if you have head of household with one child, the amount of the credit increases. Again, it's based on filing status plus your situation in terms of the number of kids you have. And you could see there that there's also a steep drop-off. This drop-off area is really known as a phase-out, okay, because the amount of the credit starts to phase out after a certain amount of income, and at a certain point of income starts to become zero. Similarly, you'll see that married filers get possibly the most out of this credit unless they make too much money because of that phase-out. So a married filer with 2 children can really get up to $3,500, but it starts to phase out over here. So the exact numbers, I'm not going to get into every single situation, the exact numbers, but this is a very rough idea of how this is structured. And as you can see, if you're making $300,000, $400,000, $1 million a year, you can forget about all this because none of this matters. But let's back up a second and go back to this person's question. And it's very astute because they're basically saying that based on their income and their filing status, they qualify for the stimulus payment in tax year 2018, but they won't in tax year 2019. Should I just wait to file 2019 taxes? Very interesting, because when things are done last minute, and this legislation was definitely introduced at the 11th hour, given the situation that we're in, it can present some opportunities from a planning perspective to try to maximize your benefit. And this is not some black hat illegal stuff here. This is just taking the rules and saying, okay, if we're smart about this, how could we possibly benefit from the way they're structured? Okay, so there's no off the book stuff going on. There's no gray area. We're using the rules as they've been dictated through the legislation. So let's take a look at this Forbes article that I mentioned that touches on this. And it is written by Tony Nitti, who's actually, he writes really well when it comes to income taxes. Forbes articles on this usually fantastic. And he says, when you file your 2019 tax return will impact your stimulus payment. Okay, interesting. And it says here, as part of the recent $2 trillion stimulus package passed by Congress, most people will receive a check or direct deposit in coming weeks and months. But how much will you get? It depends. And moving through here, let me make sure you guys can see this. All right, so let's take a look here. So it talks about the phase out based on income. We've already covered that. And let's take a look at this section in particular. It says, this presents an opportunity. An individual who has not yet prepared his or her 2019 return should take into account the relevant variables, adjusted gross income, marital status, number of children, and determine which year would yield the bigger payment. If it's 2019, then you better hurry up and file. If it's 2018, then hold that 2019 return back until you receive your payment. Very nuanced, but definitely an opportunity there. So let's take a look at the first example here. In 2018, A and B are married but have no children. Adjusted gross income for the couple is $200,000. In 2019, however, A and B have a child and B takes a leave from work. As a result, income drops to $120,000. Based on A and B's 2018 tax return, they would receive no stimulus payment because their income exceeds the phase-out limit. Based on their 2019 return, however, they're entitled to the payment of $2,900, which is $2,400, $1,200 each, plus $500 for the child. As a result, A and B should file their 2019 return as quickly as possible. All right, and let's take a look at how this can work in the opposite situation. So let's see here. I believe there's also an example of that. Let's see. Okay, so let's look at example 4. In 2018, let me make sure you guys can see this. In 2018, A and B have a 16-year-old daughter and income of $120,000. In 2019, they have the same income and their daughter has turned 17, okay, which may impact that $500 amount. Based on A and B's 2018 return, they are due a payment of $2,900, which is the $2,400 plus the $500. Based on their 2019 returns, however, the payment would drop to $2,400 based on their daughter turning 17. As a result, A and B should delay filing their 2019 return until they receive their payment. All right. Very interesting opportunity here, and it is a narrow window to the taxpayers to which this applies. It really applies when you have a difference between your 2018 situation and your 2019 situation, specifically when you would qualify for the full credit or more credit in 2018 than you would in 2019. There is an incentive here to wait to file. Now, the interesting part about this is really the fact that it's one directional and that it's advantageous towards taxpayers. They really didn't want to introduce a gotcha into this program to where you get money now and then it's taken away from you later. So the article touches on this and it describes it really well. So let's take a look at this part here. Okay, of course, the stimulus payment is intended to be an advance payment against an actual credit you will compute on your 2020 tax return. I know that sounds crazy. Let's keep reading. Thus, you may suspect that in example 4 above that we looked at, by delaying the filing of the 2019 return in order to receive the $2,900 advance payment, A and B will receive only a temporary benefit because when they file their 2020 return, they will receive a credit of only $2,400 and they'll be required to recognize income or worse, pay back the $500 extra credit that they received. But that's not how the stimulus package appears to work. In fact, it's favorably one directional in that if your advance payment is less than what you'd owe when you computed then you're owed when you compute your 2020 return, then you'll get the excess as a credit on that return. But if your advance credit is greater than what you're actually owed come the filing of your 2020 return, there appears to be no mechanism to either repay the excess credit or recognize the excess amount as income. Let me break down what that means. So it's supposed to be based on 2020. They don't know your 2020. Then they're going to try to base it on 2019. They may not have that information, so they might base it on 2018. But now the question is, well, let's say they base it on 2018, but the time they figure out 2019 or 2020 rather, they may make me pay that amount back that I received by delaying my filing and going through all this. But that is not seemingly the intent of the provisions as they stand now. And there does not seem to be a clawback provision that would punish taxpayers for taking advantage of this opportunity. And in that, there really does seem to be an incentive to try to delay the filing of a tax return to maximize the benefit here, just based on the way the rules are written. I didn't write the rules. We're just trying to interpret them. And as tax professionals, we're obligated to maximize benefits for our clients in a legal manner. And this is exactly that. So I have one particular client that I'm working with right now. I was getting ready to file the 2019 returns. But then I said, wait a minute, how's this going to work with that $1,200 credit? Now, this is a single individual, and in 2018, this person's income was very low. In 2019, this person's income increased substantially. So I started thinking, well, if I file 2019 now, could that present a problem for them? And I started researching this, and it turns out that there is an incentive to hold off on the filing of that 2019 return, most likely until April 15th, and then obviously we have the coronavirus extensions on top of that. But let's just call it April 15th for now. There's not really a disincentive to wait. It can delay refunds that you're expecting for 2019, but you have to weigh that against the additional credit that you may receive. So essentially, their information is going to be based on tax year 2018, or I should say the amount of this credit is going to be based on 2018. So they're expected to receive the full $1,200. Now, based on their income in 2019, they would receive a lesser credit by about $550. So by waiting to file their returns less than a month, if they receive that payment before filing their 2019 return, they may very well save $500, more than that, just by delaying the filing based on the nuances of how the rules are structured. Now, this is where we really make our money as CPAs, as tax professionals. It's not typing in W-4s and W-2s and things like that. It's really being strategic in how we approach things. And I could have filed that person's return today, no problem, and they probably wouldn't have even known that they had an opportunity to receive a greater credit. But being a professional, putting my client's interests first, I felt that I needed to reach out, let them know that, hey, we could delay this, maximize the credit for you. And the way the rules are written, there doesn't seem to be a provision by which you would need to pay that extra credit back. Okay, so it's advantageous, but it's one directional in how it's advantageous. So that's good. So it's not going to go both ways. On the other side, let's say that based on 2019 income, you didn't get any credit, but based on 2020 income, you're owed the credit. And this is where the one directional aspect comes in. In that case, it's going to work in your favor in that you're going to get that money that you would have gotten a while ago, but it's not going to punish you by taking a bigger credit now than you would be entitled to based on your 2020 return. So if you're going to get extra money based on 2020, that can happen, but it's not going to happen that you're going to have to owe this credit back because, your income is higher in 2020 or 2019 and so forth. So that penalty doesn't exist now. That doesn't mean it can't be introduced. That doesn't mean they can't tweak the rules to say that, hey, by the way, we didn't realize that there's this little advantage that was built in here. We didn't intend for it to happen. We're going to fix it. That doesn't mean that. Anything goes. But the way the rules are structured now, Forbes is also interpreting this in the same way that I am, in that there is an opportunity for taxpayers that would qualify for no credit or reduced credit based on 2019 to delay the filing to take advantage of the credit they would receive based on 2018 returns. But as I mentioned, if you make $1 million a year, none of this matters to you. But at the end of the day, there is some advantage here that you can take advantage of, possibly if you're in a situation specifically where your 2019 return would not qualify you for the full credit or a reduced credit, whereas your 2018 return would. There is an incentive here to delay the filing if you can. Now, there's also some whispers going around. Don't quote me on this. But there are some whispers going around that even if you extend the 2019 return, that may confuse the IRS computers because they're going to try to base it on 2019 information, and you may jeopardize this benefit by extending your 2019 returns. These are just whispers, rumors around the grapevine, around the old water cooler. But I did see that mentioned. I wanted to put that out there. It may not be factual, may not be correct, but it's something I heard, and it does have a little bit of logic built into it, because if I'm the IRS and you filed an extension, I'm very curious to see what's on that 2848 that you filed, and or that extension document that you filed, and use that information if I possibly could to try to reduce or eliminate the credit for some taxpayers. But anyway, that is what I have for you guys based on this opportunity here, and hopefully this addresses the question that you had here, Pensy Prep. If you have any other questions, definitely feel free to reach out. Hopefully this was helpful. Thanks for watching.